Hey, good morning, Cab. Good morning, everybody. Nice to see you guys. I want to do something real quick. Before we even get into the day, um, I wanted to do this. Good morning, Jen, or good afternoon, Jen. I had a little conversation with somebody this morning, just about guys doing a little clean out in the mornings, setting up for success, getting any nasty, old, corrupt data out of there. And it's really easy to do. It takes about 3 or 4 seconds, guys. This is a part of my routine. When I wake up, this literally is the first thing I do before I open up NinjaTrader, is I go to my PC and I go to Documents, and I double click on NinjaTrader 8, and then I go to the database folder. So I'm going to show you guys this, and this all happens before you open up NinjaTrader. So there's your path, so you know exactly where to go. And now this cache folder and this tick folder, guys. I delete these every morning. Let me put this in here. I notice sometimes there's a few of you that have fibs that I don't have, or divergence that I don't have, or something like that. And I go through this process every morning, making sure that I'm giving myself fresh data for the day. It's a great habit to get into. Um, I mean, data corrupts after a while. So this is a great one just to go through and do this. And thank you, person that brought this to light, that maybe I needed to discuss this. You know who you are. But that's the first thing I do every morning, guys, is I go through and I do that. And I just kind of do a little clean out. I also, and John says you probably don't have to do this, but I'm a creature of habit. I also go to my temp folder and I clear everything out of there. And then I also go to my workspaces folder and I get rid of my recovery. And guys, this is old habits. This is something that I've been doing forever. I did it on NinjaTrader 7, did it on NinjaTrader 8. But that is just a way to kind of set up and start clean, and make sure that everything's kind of cool the way it needs to be cool. Yeah, I think it does too. You delete workspace as well? Yeah. So guys, that's the first thing I do every morning. And I'm very much a creature of habit. So the second thing that I do every morning is I come to forexfactory.com and I check my news and I make sure that there's not something going on that may mess up my good time. And forexfactory.com/calendar, guys, it goes through every day and it talks about high impact news, which are these red boxes, and medium impact news, which are these orange boxes. And then also there is low impact. And depending on what it is, it can make a difference as well. So I'm looking for all three of these each and every morning. I'm not basing my trading decisions on the news, guys. I trade patterns that are repeatable, and news seems to be different every time. But what I will do is if I see that there is high impact news or I see that there's medium impact news, I make the choice to not trade into it. I make the choice to exit a position if I'm in a position so that I don't have to jump in the way of a freight train of emotion on people, making decisions based on what the news says. So that's the other part. So at 10 a.m., guys, put a note on a sticky note, right? Stick it to your monitor, put it on your keyboard, have Siri set a timer for you, whatever you need to do. But at 10 a.m., guys, there might be a little bit of crazy going on, and I just don't want to be caught in front of it. And then everything that I'm going to talk about each and every day, guys, comes from the education page. But let's go to the software user guide and instructions first. The first tab, or the first subject from the software user guide, is NinjaTrader 8 best practices. NinjaTrader 8 daily cleanout is recommended, but not required. Nothing is ever required of you guys. You're your own captain of this boat. But by cleaning out every day, it really does help. And it goes through how to clean out NinjaTrader prior to opening charts. It goes through the whole thing right there. It talks about doing that data. It talks about taking those temporary folders out, making sure, confirming your window tab closed. Guys, there's a lot of best practices. Good morning, JW. Don't be shy about reading through the instructions a little bit every now and then, especially if you're brand new. I know that I've got new people in the room. So This is your NinjaTrader how-to. As you get acquainted with the software, the indicators, all that great stuff, this is a great one to just run through and say, all right, how do I screen capture? Because I'm going to tell you right now, screen capture is the most important thing you can do. This is how you and I have a conversation. Make sure you're comfortable with it. And then the second half of this classroom is if you're not comfortable with something, whether it's building charts or whether it is closing workspaces, taking pictures, using the spreadsheet, guys, I need you to just raise your hand and ask. Jen, you did market replay? So you're a little smarter today. I love that. Got a few extra repetitions even when the market is closed. And I can't stress enough, guys. Good morning, Zorro. You can't upset me or you can't rob me of my time by asking questions. This class is 100% designed to answer your questions. And then when I'm not present, all the answers are right here in the tutorial section. And this is one thing that I'm actually pretty proud of is there aren't any secrets with Nexgen, guys. We don't give you a little bit and hope that you'll buy some more from us. You're going to get everything that you need to be successful. Everything that you need to be successful right here in this classroom, right here in the website. But here's the deal with it. Is I'm going to hand you the fastest car in the world, but you've got to learn how to be a race car driver, right? I'm going to give you the best hammer that money can buy, but you're going to have to learn how to be a carpenter. And that's what this classroom is designed for. This classroom is 100% designed, first and foremost, to teach you how to be a chart reader. And I start here every day because this really is the most important thing. Your job as a brand new user, your job as an experienced user that's maybe struggling, is to go back and focus on your chart reading, focused on being able to understand where the market is likely to continue, where it's likely to go, and where it's likely to stop, because this is the basis for trade entry and management. Becoming a chart reader will have you recognizing more opportunities in the market. Becoming a chart reader will be able to create expectations based on the patterns, and it's the chart reading that's going to take you to trade entry precision, guys. And this is what our first hour is. So JP Weiss, welcome to the room. Our first hour is 100% dedicated to the high probability trend trade. And I'm going to go to the glossary of common terms, guys. Another one you should check out if you're curious about some of the terminology in the room. But we're going to talk about a high probability trend trade, guys. And we're going to talk about this for about an hour and 15 minutes. We are going to discuss the advantages because the high probability trend trade is defined when each indicator on every chart agrees for the trade. Triggers are their strongest. No termination conditions exist. There's no trouble spots between your entry and your target. And it's this high probability trend trade that turns you into a chart reader. And I think that that's the important thing is that understanding the high probability trend trade opens the door for you to know where the market is likely to continue, where it's likely to go, and where it's likely to stop. And then your trade entry precision is based on those advantages produced by the rules. And then once you have the perfect entry, guys, it becomes easy to manage. Great entries create manageable trades. So we're going to refuse to put the horse before, or the cart before the horse, excuse me. And we're going to focus on the high probability trend trade. That's going to be the goal for the day. And there is a path, and man, we love to fight this path. There is a path to becoming a confident trader ASAP, guys, and it begins with posting your trades in class. Every time you read a chart, take a trade, tell me what your read is. Tell me what you're seeing on your charts. And I want to share this picture with you. Every time you take a trade, guys, what kind of trade is it? You have to ask yourself that. On your large chart, identify the advantages that are present. On your small chart, talk about the entries, talk about the exits, talk about where it's coming from and what the looks are. Because once you can turn everything into a chart read, identification of advantages, then you understand whether or not you had a high probability trend trade, whether or not there was a statistical advantage present based on the patterns that told you that it's time to take a trade. The second thing is using the spreadsheet that Nexgen gives to you, and the one that I give to you every day, and I'm going to do it again right now. This spreadsheet this is your trade journal initially. The first tab of the spreadsheet, I'm going to drop it in the room right now. It's in the chat box. You can download it. But the first page is your trade journal, guys. Every time you pull the trigger, all we're doing is we're creating a record of the trades that you take. And the first tab here is going to ask you a lot of questions like, well, how did you feel? And what you'll find is that there's a direct correlation between how you feel and your ability to follow the rules. It's going to ask you about the rules, the same things that you should be typing on the chart. But the cool thing about the spreadsheet, guys, is there's a notes section there. And the notes section is where you can put the feedback from class. I like to say this, that every time you post a picture in the room, so Gino drops a picture in the room, and every time Gino does this, he and I get this great opportunity to have a private session. And this private session allows us to come through and talk about what he sees, what he was looking at, what he was hoping for, and if there's a way to do it better. And we'll cover that one when we start talking about charts. But the more that you put into your spreadsheet, guys, the better you annotate your charts, the easier it becomes to get that feedback, allowing me to know what it is that you're reading, so that if there's a read problem, we can talk about it. Your third tab is where you're going to build a trading plan. Every time you present in the room and we're like, man, Gino, perfect trade, beautiful trade, I love what you did, you're going to drop it into your personal trade setups. And this is how you're going to develop your trading plan, because these are the looks that become easy to you. And it doesn't matter if they're not easy to me. And it doesn't matter if someone else in the room isn't taking them. And it really doesn't even matter if these looks are or are not a high probability trend trade, guys. This is an opportunity for you to build your plan based on your ability to read your indicators. And then the final page is really just you guys being brilliant, dropping things in the room, great lessons, whether they're from winning trades or even and especially if they're from not winning trades, from losing trades. Because the losing trades tend to be where the best information is, because sometimes it's easier to make money by simply not taking the wrong trades than it is to continuously take the right trades. And it's not always the money that you make, but it's the money that you don't give away unnecessarily. All of these looks, we've got entries, we've got management. If you're a NASDAQ trader, got some great stuff on there. Patterns that repeat themselves, a whole section dedicated to termination conditions, and then about 300 pictures of Nexgen users using the software. And what I would encourage you guys to do is click on somebody's chart, right? And look at it and say, well, let me identify the advantages. Let me identify what's going on in this, and make sure that you can just do the chart read, because what it is if it's in the spreadsheet, it has advantages. Maybe not all of them, but you can go through and you can literally re-annotate somebody's chart, maybe with the rules that you're trading. So post in the room and use your spreadsheet. These are the two things that are the most ignored. These, in my opinion, are the most advantageous. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. You guys can simulate during class. You can simulate after class. You can simulate before class. But there's no reason to risk your capital as you learn something. So embrace the idea that the simulator is okay. And even more so, if you think you're ready to go live and you're making a couple mistakes, going back to the simulator is not a failure, guys. That's intelligent business. Post your pictures in class until you're sure you have the correct rules. Don't practice the wrong trades. Getting lucky on simulator feels good. It's a short-term victory, but it typically sets you up for a long-term failure. We're going to simplify. Man, we're going to simplify. We're going to focus heavily on the high probability trend trade. I'm going to dedicate an hour to 3 little rules on the chart. You need to figure out what looks you're going to commit to. What's it going to look like when you take your best trade? And guys, this is where the spreadsheet really comes into play. I've done a lot of work for you on the client trades. Your job is to make your favorite look section. Hey, good morning, Miss Cindy. Nice to see you in here. Make your personal trade setup looks, guys. Make this section look like the work that I did. And then even more so for you brand new users, when we start talking about these 3 advantages that make a trade, I've included a section that is nothing more than each rule broken down, both met and not met. And I'm telling you, that's a great way to get some recognition going on. You've got to know what it looks like so that it becomes easy. You've got to be able to recognize a trade when nothing is moving in order to recognize a trade when everything is moving. So making sure that you're annotating. Tell me everything that you need to tell me. Add stuff that you're not even sure if I need to know, if it helps. Use that spreadsheet, asking yourself every morning what worked, what didn't work, scrolling back, looking at your trades, reading the feedback. And 5 minutes every morning looking at what you did yesterday is going to set you up for the day. And then finally, guys, we're going to talk about this high probability trend trade. We're going to get it going right now. And I'm going to tell you that this high probability trend trade is a trade when you follow the rules that typically wins 70 to 80% of the time. This is a trade that creates confidence through the memory of success, but most importantly, this is a trade that teaches you to read your indicators. This is a trade that'll have you understanding the direction of the market, and this is a trade that will have you knowing whether or not momentum is in your favor, or maybe it's against you, or maybe it's just non-existent. This is a trade that's going to have you recognizing areas that may stop the market, that may create bounces. And all of this happens, really 99% of this happens on a large chart. We use two charts, that's it, simplicity. The large chart is a broad stroke of a brush, and on the most current bar on the large chart, you will be able to define direction, momentum in the areas that are either helping or being problematic. And it really shows the overall opinion of the market. And this large chart, what it does for you, and let me go to my favorite picture here, is it lets you know what the large crowd wants. I want you guys to go stand in front of the mirror after class today, look yourself dead in the eyes, and say, I don't control the market. I don't make it go up. I don't make it go down, guys. And the market doesn't care what I want. It just doesn't. So by understanding what the large crowd wants, the people with the money want, these are the guys that create direction and gals. These are the people that establish momentum. These are the people that react to areas. And if you commit to yourself just right from the get-go, you know what? I'm going to stay with the large crowd. I'm just going to do what they do. If they push, I'm going to go with the push. If they change directions, I'm going to change directions. And you'll find that it eliminates about 70 to 80% of the problems that most new users have. Your first two rules happen on the large chart, and you will have momentum and absolutely nothing in your way once they're met. And then we go to a refinement chart. We go to a smaller, faster chart. And this one bar that defines direction, momentum, and areas, guys, we're going to do an x-ray of it with the smaller, faster chart. That one bar on the large chart gets broken down into approximately 15 to 30 bars from the very top of the most current bar to where eventually should become the very bottom of the most current bar. And you're going to use this for entry. You're going to be able to refine that broad stroke, and you're going to be able to pinpoint where the market is likely to continue. And that refinement process will allow you to reduce risk. It'll allow you to maximize your profit potential. And that's rule number 3 of 3. So as we go into the high probability trend trade, understand that each rule, and there's only 3 rules, creates an advantage. And it's not your desire to win a trade or your need to pay the mortgage or your want to make $1 million this year that sets you up for success. It's your ability to speak to yourself in terms of advantages every time you look at a chart, or the other side of the coin, to recognize when advantages aren't present, so you know to be on your guard to manage more aggressively. But a trade is nothing more than momentum, a clear path, and an entry area. That's your high probability trend trade. That's the trade that typically wins 70 to 80% of the time. And guys, that's the trade that makes you a chart reader, so you can begin to recognize instantly all these other amazing opportunities that the software provides, that the market provides. Hey, good morning, Ivan. Nice to have you in here. So let's start with rule number 1, because it seems like a great place to start. And rule number 1 says that your large chart needs strong trigger lines. The large chart, remember, on the most current bar will define direction and momentum. And that's what we're doing right now through rule number 1, because the only way to have strong trigger lines is if you're actually trading with the direction of the market. And again, guys, this is for new users. This is for brand new people to stay on the right side of things, to have those advantages. And if the market is green, or the background is green on your large chart, you should be looking for rules to be met for high probability trend trades long. If the background is red, you should be looking for rules to be met for high probability trend trade short. Green is up, red is down. Don't ever fight it and avoid a lot of mistakes. As you grow with the software, you're going to find a time where it's appropriate to maybe break that idea. But until you're a chart reader, that's your safest bet. And then strong triggers happen, most importantly, when all the colors match. When you're small triggers, and small triggers are these solid lines, they're a fast moving average. And your large triggers, which are these dashed lines, this is a slower moving average. When the small break above the large, when space is created, it looks very much like scissors opening up. It's that space created that lets me know that the odds are favorable for the market to continue up. And this right here is the visual of what strong triggers in an uptrend look like. In a downtrend, the background is red, the smalls are red, the large are red. The small have broken below the large. There's space between the two, and those triggers are wide and angled in the direction of the trend. So once again, the odds are favorable for the market to continue down. This is your strong trigger line. Hey guys, strong triggers are amazing. Strong triggers break areas. Strong triggers push the market in the direction. Strong triggers even cover mistakes. And one of the things that I did for you on this spreadsheet is I gave you a section, a 101 section, where if you will go back historically and find 25 pictures of strong triggers, what you're going to do is you're going to be able to recognize this look at a moment's notice. You're going to be able to say, absolutely, that is strong triggers to the downside. And without question, this is strong triggers to the upside. And what that means for you, where the heck is my, here it is when you have strong triggers to the upside, guys, that is the best of the best time to buy Fibonacci support on a smaller, faster chart. Or when you have odds favorable momentum to the downside, that is the best of the best time to sell Fibonacci resistance on that smaller, faster chart. On the large chart, one bar, it looks like a tail, it looks like a wick, but using that smaller, faster chart, you are literally going to be able to time out that pullback that creates the wick, and you're going to be able to pinpoint exactly where it's most likely to happen, and that's going to become your entry for the highest probability trend trade long or the highest probability trend trade short. But it's important that you understand odds favorable momentum is rarely a constant. I've never woken up at 5 in the morning and had odds favorable momentum one direction until I went to bed at 9 o'clock. So you have to be able to recognize it so that you can embrace the advantage. And when you have odds favorable momentum, in this downtrend, separation, everything is wide, you're going to be able to pinpoint exactly where the market is likely to continue on that smaller, faster chart. And this is your best of the best, guys. This is the most ideal situation for the new user. But with both triggers down, when one of the two small triggers is inside of the large triggers, this is the first sign of momentum slowing. Remember, you're a chart reader, and your chart reading has just told you that momentum is waning, which means that shorts can still be taken as you grow with the software, as you understand, but you're going to rely on your chart reading to make sure that the other charts agree. And then finally, with both triggers down, once both of the small triggers are inside of the large triggers, you have a weakening or a slowing of the trend. Visually, you can recognize that your advantage of momentum is gone. And the phrase that you're going to hear in the room, guys, is anything can happen. Anything can happen triggers create deeper retracements. Anything can happen triggers at support or resistance can actually reverse the market at those key areas. And anything can happen is a phrase that reminds you that your advantage is gone. So strong triggers is a separation. That separation says strength. And that strength lets me know that I have a market that's likely to continue in the direction of the trend. And I want you to see this. Strong triggers took me right up to a mid-band. Strong triggers is pushing this market down. So what you do is you start recognizing strong triggers, and maybe you go through and you take a picture, and we're going to take pictures today. And I'm going to take a picture of strong triggers. And I'm going to do it just like this. And this is me telling you how to study. Strong triggers means odds favorable momentum. This is rule 1 met. And I want you to take this picture, guys. I want you to take 25, 50, 100 of these pictures. And I want you to save them to your screencast. and then open up, and let's put it into the spreadsheet. Because what you're going to do is you're going to come back tomorrow, and if you look at 20 pictures of strong triggers before you get going on the day, guys, you're never going to miss that strong trigger look. You're going to understand and you're going to begin to anticipate when it's time to look for an entry. So strong triggers, guys, it leads the way. Anything can happen is the opposite of good. And this is where areas can reverse. And that is our segue to rule number 2, which will also be met on the large chart. But I want to make sure that you guys are with me. I'm looking at the most current bar right here on the large chart. And the background is green, so I know that the trend is up. And then I also see that my small triggers and my large triggers are both wide and angled in the direction of the trend. Do you see the gap between the two? Letting me know that the odds are favorable for the market to continue up. Guys, we have already defined in one bar the direction of the market, and we've also defined the momentum of the market. So now we're going to define the areas of the market. And when we talk about the areas on the large chart, we're going to use them to define whether or not they're a termination condition, because rule number 2 says termination conditions false. Room to profit targets is true. It's saying the exact same thing. But when rule number 2 is met, we're going to add the advantage of a clear path to the momentum that we just established. So areas that may reverse the market based on a comparison of the Fibonacci area and the T3 trigger strength and location, guys. That's what a termination condition is. And we'll be looking for blue Fibonacci support and red Fibonacci resistance, yellow 1-to-1s, cyan divergence low lines, magenta divergence high lines. It can be any third divergence in the same area. It could also be a large sharp midband. And I'm going to let you guys in on a secret. These areas, let's get rid of that one, on the large chart. These are where decisions are being made, guys. These are where the large crowd is taking profits. These are where the large crowd are exiting positions. These are where the large crowds, whether it's the buyers or sellers, may be entering, may be exiting, may be getting paid. And guys, these are also the areas where the large and small crowd, or where the large crowds, buyers and sellers, may fight, where they can't agree on a direction, where they go after each other for a while. And you never have to get caught up. With a simple recipe, and we're about to talk about it, you're going to understand when these areas are likely to stop the market, making them a termination condition. You're going to understand when these areas have the potential to break, putting you into a medium probability trade with that potential. And you're also going to understand when these areas have broken. And when the areas have broken, well, then the path becomes clear. And that clear path coupled with momentum is what's going to have you looking for an entry. So, simple recipe. And we're going to go through and draw some pictures here because I know I've got some new faces. And I do appreciate you new faces showing up. There's a 2-part process to understand whether or not an area is likely to stop, whether it's likely to break, has the potential to break, or whether it's broken. So everything starts with price reaching the area. Everything begins with price reaching the area, meaning that your dynamic Renko bars, these are just a reflection of price, come in contact with the area in question. In this case, it's support. When price reaches Fibonacci support, all you have to do is check the trigger lines. And if they're not below support, don't take any more trend trade short on the small chart. How easy is that? That's like the easiest rule to ever remember. If price reaches the area and the triggers remain above support, don't go short. This is an area that may stop the market. This is an area that may create an untradeable bounce. This is an area that may reverse the market. And guys, here is the challenging thing for all you alpha males and females. I don't know what will happen. I really just don't have any idea. I don't know if there's a fight waiting there. I can't see it. They don't send out a memo, right? I don't know if the buyers are going to test the water and give just a little push before they give up the fight. I don't know if the buyers have 20 bajillion contracts waiting right there at that key price, and they're going to make sure that the market goes up. And the reality is that as soon as you accept that you don't know, life gets a lot easier for you guys. So price reaches an area and the triggers don't break, just relax for a second. You don't know. It's okay to not know. Same thing happened up here. Price reached Fibonacci support. All the triggers were above it. I don't know what's going to happen. So I choose to do nothing. And then we come into when the area has the potential to break. When the small triggers break through the area, but the large triggers remain above, guys, this is what we call a 50-50 look. And a 50-50 look has nothing to do with chances of winning if you choose to take a trade. What a 50-50 means is that the smalls smash through the area, and here's the key, with odds favorable momentum. Momentum can break areas. And then what it means is the area has the potential to break, but it isn't broken, which means that it's not a clear path. Rule 2 not met. So guys, this is what it looks like when an area has the potential to break. The small triggers absolutely smash through, the large triggers do not. Support has the potential to become resistance, but it's not resistance yet, which means that if I go to my rules, I have to say to myself, I don't have a clear path. And guys, this is going to be your first medium probability trade where you forfeit one advantage and rely on the other two to bring you success. And then finally, when the small triggers and the large triggers get below the area in question, support begins to behave as resistance. Now the path is clear. So let's do this one. I'm going to give you guys this picture. Both lines of both triggers below, area is broken, path is clear, rule 2 met. And guys, I want you to see what happened. At first, it had the potential to break, but we weren't sure. We checked our other charts, made sure that we didn't give up any advantages. Maybe there was a trade, maybe there wasn't. But when the smalls and the large break through support, it behaves as resistance. I have odds favorable momentum, and that most current bar hasn't reached Fibonacci support. This is where you guys are pinpointing your entry, where you're getting in at Fibonacci resistance on a smaller, faster chart. And the idea is that you can take that wave of resistance all the way down to support and capitalize on having odds favorable momentum and having a clear path. So I'm going to share this picture in the room with you guys. There's 3 options for the new user. And I'm going to pull one up that's not quite as confusing so that you guys can have it as well. And I've got a million pictures, and I'm going to tell you right now, if I put it in the chart, it's probably pretty important. Don't be afraid to steal it. 3 options, but only 2 for the new user, for the high probability trend trader. The first one is if price reaches resistance and no triggers are through, the area is not broken, it is no clear path, there is no trade because you just don't know what's going to happen. If both the small and the large break through the area is broken, the path is clear. Let's look for rules to be met for high probability trend trades. That's the new user. And then I'm going to give you a plan, and your chart reading is going to allow you to capture when the small triggers smash through but the large triggers do not. The area has the potential to break, but because it's not broken yet, it's not a clear path, guys. And those are your 3 options when you reach an area. One requires patience, one requires chart reading to understand if there's an opportunity, and one says, man, let's look for the best of the best because it looks absolutely perfect. So triggers reach, or price reaches, no triggers, no trade. We don't know what's going to happen. Price reaches resistance, no triggers break. I don't know if they're going to push. I don't know if they're going to fight. I don't know if it's going to break. I choose to do nothing. This is a termination condition. No more long trades. And then from here, price pulls all the way back to support, all the way back to that mid-band area. All of my triggers remain above, which means that I can't go short because rule number 2 isn't met. Once again, I'm sitting on my hands. And then price comes up to resistance. It comes to a divergence high, and it comes to resistance again. These are all termination conditions because the trigger lines are below. Guys, this creates what we call a pivot stop out. When the market goes up and down or down and up, that's a pivot. It's like a V. And when this pivot has a loss of momentum, you'll see this magenta line print. Or if it's from a low, you'll see a cyan line print, a light blue line. That's just a loss of momentum. That's all. But if you remember the recipe for termination conditions, once price reaches that divergence high and the triggers remain below, now it's a termination. And if price trades above that divergence high and then back below, it's a pivot stop out. No more long trades. And it's very clear in the user guide. It's very clear whether it's a low or it's a high. And I'm going to show you the pictures from the user guide. Price goes down and up, there's a loss of momentum. It creates the cyan line. When price reaches the cyan line and the triggers are above, it becomes a termination. When price trades below and then back above, now it's a pivot stop out of a prior divergence line. No more short trades, guys, right from the user guide, right from the manual. If price goes below a divergence line and back above, no more short trades. If price goes above a divergence high and back below, no more long trades. And guys, even more so, this pivot stop out, when Fibonacci resistance or support is true and acting as a termination condition, it adds power to the top. So no longs, no shorts, no longs, son of a gun, how am I ever going to make money? Well, this one reverses the market. Gives me odds favorable momentum. My bar hasn't reached support. Guys, there's your entry. There's your highest probability trend trade. This is you capitalizing because you didn't give it away during the fight. You didn't give it away during the indecision. And this one illustrates it even better. Odds favorable momentum smashes through Fibonacci support, never gives you an opportunity. You're sitting on your hands waiting for your advantages. When it reaches these yellow 1-to-1s, the trigger lines stay above. So the only option for anybody that's following high probability trend trade rules is to sit on your hand and do absolutely nothing. And you become thankful quickly because look at the bounce. And the bounce is directly into Fibonacci resistance. And that Fibonacci resistance has every trigger line below it. So you're saying to yourself, and man, this is hard to do in the beginning because you guys want to be active. You're saying to yourself, I can't go short. Whoops. Into the termination condition. And now I can't go long into the termination condition. And now my trigger lines don't match, so I can't have momentum, so I'm not really looking for a long or a short. And in all of these fluctuations, there's just not a darn thing for me to do. And guys, I'm going to tell you right now, I see people losing thousands of dollars in points of consolidation. I see accounts being blown out and reset all the time in consolidation. And here's the cool thing is this is your 90%. 90% of your day is spent reading indicators. 90% of your day is waiting for the advantages. Eventually, you get odds favorable momentum. You have a clear path because all the trigger lines are above resistance. It's now behaving as support. And guys, there's that tail or that wick, and that becomes the highest probability trend trade that you could ever take. The one that happens after a termination condition that reverses the market. This is the one that typically wins 70 to 80% of the time. This is the one that creates confidence from the memory of success. This is the easiest, calmest trade for you to catch. And the cool thing is if you grab hold of this one, you're up $400 or $500 on the day. But if you got caught in the fight, if you formed opinions, if you broke your rules, well, you may have caught this beautiful trade and found yourself still down $500 or $600. So sometimes it's not the trade that you take as much as it's the trades that you avoid, guys. And putting yourself in a position where every time you take a trade, you're taking a trade with a statistical advantage, with a pattern that has been proven to win more than it loses. And guys, termination conditions are going to happen all day. Let's pull up our large chart. Whoop, there's one in the making. Price reached Fibonacci resistance and not one trigger line broke through. Wow, it was cranking, wasn't it? And look at the bounce. Small and large got above resistance. It behaved to support. Look at that tail pulling right back to the area. Do you think the people that run the market don't know where these areas are? They know exactly where they are. And I want you to see what set it off, guys. Triggers didn't break support. This was your bottom. And then there were also 3 divergences in the same price range. But I want you to see what set it off to get down to resistance. All the triggers below resistance, and that was the beginning of the push down. You guys know exactly where these areas are. You know exactly where they are, sometimes days in advance. You just have to go through the idea that it's okay to not catch every move, that every move isn't your move, that all the money isn't your money. And eventually you'll be able to capitalize. But I want to share one more termination condition with you. And this is actually the one that set off that large chart moving up. And it's going to help you by using the small chart, identify the change that you can't see on a large chart. Because sometimes the large chart turns from nowhere. And it seems odd, but your smaller chart will give you the little heads up. 3 divergences in the same price range may terminate a trend. And this is a very powerful condition when the third divergence happens with the small triggers inside of the large. When this third divergence has anything can happen triggers, it becomes more powerful. Becomes even more powerful when the third divergence is higher than the previous, creating a head and shoulders pattern. And then once again, just because all we're doing is trading patterns that repeat themselves, I want you to see what set off that huge move up on the NASDAQ. 1 divergence, 2 divergence, third divergence is higher. And this market hasn't blinked, guys. It hasn't blinked for, oh my gosh, over 100 points. And this is what we do. Patterns repeat themselves. Patterns are going to allow you to capitalize. Patterns are what we trade, not opinions, not wishes, not wants. Patterns repeat themselves every day, guys, and what you're doing is you're beginning to recognize and learn these patterns and then learning how to be patient when they're not true. So if I see 3 divergences from a lower high on a small chart, it's going to help me identify when maybe that large chart is about to turn on me. It helps keep me out of that final trade because with 3 divergences in the same price range, rule number 2 isn't met. If I'm in the perfect short and 3 divergences print, well, maybe I manage out. Right? Or if I'm thinking about taking that next short, but 3 divergences print, it's rules met or rules not met, don't take the trade. So is everybody cool so far? We're letting the large chart do all the work. We're letting 1 bar in the large chart do all the work. So far, the large chart has defined direction. It's either red or green, up or down. The large chart has defined momentum. I either have strength or I have anything can happen. And the large charts told me exactly where the people in charge are likely to react, and my trigger lines let me know whether an area was likely to hold, likely to break, or already broken. Guys, the large chart is this magical unicorn that really tells you 99% of what you need to know. The small chart, when the rules are met, is going to refine this broad stroke of a brush, and what it's going to do is it's going to refine it so effectively that you're going to be able to use a limit order to buy or sell a pullback in areas inside of favorable large triggers. And it doesn't say favorable large triggers on here, but I want to share with you what favorable large triggers are. But the small chart just simply, it allows us, if everything is up and everything is strong and there's nothing in the way, you guys are going to pinpoint using Fibonacci support on a smaller, faster chart where the market is most likely to continue, and this becomes your entry. When everything is down and everything is clear and there's nothing in the way and life is good, you guys are going to be able to sell high at Fibonacci resistance by using that smaller, faster chart. And there's a refinement process. When everything is down, when everything is strong, the beginning or the lowest point of the bar, and this is where it's going to be in the live market, is going to be the beginning of your pullback. We buy or sell a pullback in an area inside of favorable large triggers. The top of your bar, that 1 bar with momentum with a clear path, when the rules are met, is a pullback to Fibonacci resistance inside of favorable large triggers. Guys, you're going to pinpoint exactly where this market is likely to continue. You're going to be able to study it by circling these tails on a larger chart and see if they actually happen at resistance inside of favorable large triggers. But I did a little homework for you guys this weekend, so I'm going to share something with you. When I talk about favorable large triggers, when I talk about the entry, guys, that is not my entry picture. Here we go. Favorable large triggers means that your large and your synthetic triggers on the small chart are one on top of the other. Favorable large triggers means that the large triggers, the smooth, the same ones that create momentum, and your synthetic triggers, which are nothing more than the large chart, large triggers, should be wide. They should be angled in the direction of the trend, and they should look like two snakes riding piggyback, because these trigger lines are moving averages. And moving averages create a point of correction. We expect price to work its way back to these trigger lines. But the beauty of the methodology is that we don't trade from trigger lines, but rather areas inside. So when I put a fib, a mid-band, or yellow 1-to-1s inside of favorable large triggers, not only do I have a tight correction point, but I have an area for it to bounce. And guys, I went back and took 9 pictures this weekend, and I'm going to start with this one. The difference between favorable large triggers and split triggers. And guys, whoops, what did I do? I want you to see how the large and the synthetic are not overlapping. They're not one on top of the other. And price blows through one correction point, and it reaches the second correction point. And you're going to see this a lot. Price goes through the first correction point, reaches the second, the triggers are split, and there's this indecision. And I didn't even put areas on it for this. Into the first correction and beyond, because there's 2 correction points. And guys, when they're tight one on top of the other, it becomes pretty easy to pinpoint where the market is most likely to continue. When they're overlapping one on top of the other, it becomes pretty easy to recognize where the market is most likely to continue. And then when you put Fibonacci support for a long trade inside, now you have a place to bounce inside of favorable large triggers. And now you have a place to bounce inside of favorable large triggers. And guys, you see this all the time. When they're one on top of the other, the area is tight. When they split and divide, notice how you don't know where it's going. So I want you guys to take this little lesson, and I want you to understand that rule number 3 says that you're going to buy or sell a pullback, a small retracement in price. And that retracement in price is nothing more than, let's pull up the picture, the small crowd. The large crowd says up. The large crowd says momentum. The large crowd says that there's nothing in the way. So there's a group that likes to push against. And that's the small crowd. And the small crowd typically is able to push you back to an area inside of favorable large triggers. So we're gonna refine it, and we're gonna find it. And then guys, I'm gonna use the spreadsheet that I gave you, and I'm gonna go back to the client trade section, and we're just gonna go through it together because there's a process for finding the entry point. And everything begins with the large chart rules being met. I can't stress this enough. You should have momentum and you should have a clear path as a brand new user, because this just increases the likelihood of success tenfold. So when the rules are met on the large chart, guys, you've got to go and you've got to wait for the small crowd to do their thing, and that begins with the reversal bar. We do not enter on the reversal bar. Well, you can if you want, but it's silly. You're probably going to get run over. The reversal bar signals the beginning of the pullback. That's it. It says, hey, the small crowd's fighting. Let's see what they pull off. I know that price is likely to come back to my trigger lines, so I'm going to draw a box around my trigger lines. This is the correction point. This is the lowest point and the highest point where I expect price to correct. But that's not my entry either. I'm not trading a collision with the triggers. I'm going to give the market something to bounce off of, and those are the areas inside of favorable large triggers. Use the language. So step 3 is to create a window of opportunity from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. The lowest point can be red Fibonacci resistance, a magenta midband, or yellow 1-to-1s. The highest can be the same. But from this lowest point, this fib, to this midband, This shaded area represents where the market is most likely to continue. You have pinpointed with pretty awesome accuracy where that downtrend should continue, where that momentum should be able to bounce. This becomes your entry point. And the only thing left for you to do is to activate a limit order just below the lowest point of resistance. You're going to right click and you're going to activate a limit order, and you're literally going to sell the market as it comes up to you. And there, you can't control the small crowd, guys. They're either going to make it or they're not. You can't control the small crowd. When the reversal bar prints, all you can do is create your window and activate your limit order. But the cool thing is if the small crowd has it in them and it hits your order, you're going to be in a short trade. And you're not just in a short trade, yay, I was hoping the market was going down. You're in a short trade with strong trigger lines, which means that you have the advantage of momentum. And you're in a short trade with a clear path because no termination conditions were hit. And finally, you're in a short trade because you had the entry area, the point where the market is most likely to continue. These three advantages put together to create a trade that typically wins 70 to 80% of the time. And the only thing that you need to do for the next 20 days, and I tell this to every user, is get good at recognizing entries. Get to the point to where you can understand where the market is most likely to continue. For a long trade, your window of opportunity goes from the highest point of support to the lowest point of support, and your job is to activate a limit order right at the top of that window. In a short trade, from the lowest point of resistance to the highest point of resistance, inside a favorable large triggers, there is one line inside of triggers, and look at where this market bounced. When the large chart says up, when the large chart says a clear path, we don't trade tails. We don't wait for this tail to form, guys. The market's way up here. You guys can trade support inside of favorable large triggers, and this becomes your highest probability trend trade. And you can study it. Let me open up. I don't know what every market's looking like today because I really haven't watched a whole lot. Let me get my large chart up as well. And let's just do this. If I circle the tail historically on a large chart with all that momentum, you'll notice that with split triggers, it bounces once and comes between the two. And that's probably not my best of the best entry. But I can scroll back historically and say with all of this momentum and everything going up, let me see what it looks like on a smaller, faster chart. And if it lines up with support inside of favorable large triggers, guys, I know that I have a trade. I know that I have an opportunity to capitalize with the advantage of momentum. I know that I have the opportunity to capitalize with that clear path or the potential of a clear path. And if I scroll back again and look for that next circle, once again, we see split triggers ruining the party. And when I was going back taking those pictures, guys, there was an awful lot of split triggers. There will be a time where it's appropriate for you to take that split trigger trade until you're comfortable with the advantages, until you're comfortable with the recognition. There's nothing wrong with sitting on your hands and maybe not taking those trades in the beginning. Take pictures of them. And let's see, this is gold. And one of the cool things is these are patterns that repeat themselves on every market. And these are patterns that are identifiable. And that one didn't quite make it, right? But what we're doing is we're creating recognition. We're creating the ability to understand where the market is most likely to continue. And we're just circling tails and believing, look at that when I have the advantage of momentum, that there will be opportunities to enter. And all I'm doing is developing trust in the methodology. All I'm doing is developing trust in the idea that I can pinpoint where the market is most likely to continue. And then I can commit to either my rules being met or my rules not being met. But if I focus on entries, if I spend 20 days learning how to figure out where the market is most likely to continue, what it tells me is where the market shouldn't go. Because if price should pull back to an area inside of favorable large triggers, then price shouldn't go 4 or 5 ticks beyond those triggers. My window of opportunity is the point where it should bounce. So my protective stop is going to go beyond that window. My protective stop goes below the window for a long, above the window for a short. And here's the sad reality of trading, guys, is your stop's going to get hit. You're going to lose trades. You're going to lose probably 2 or 3 out of every 10 that you take if you're only taking high probability trend trades. Every 100 trades, you're going to lose 20 to 30. And guys, small losses are a normal part of a positive equity curve, but because you can pinpoint where the market is most likely to continue, you can reduce your losses dramatically. And then once they give you a bar in the direction of your trade, you can reduce risk even more to a couple ticks above, a couple ticks below. And it's not uncommon to see Nexgen users taking 20 or 30 tick losses when the trades don't work, not $200 to $300 losses. We're better than that. And what's cool is you're better than that because you understand that when the market has odds favorable momentum, it's difficult to stop. And when you couple that with a clear path, there's no reason for it to stop. But there's always that little fighting force. And if they push you back to support inside of favorable large triggers, well, that's where it should bounce and go with all the momentum. And then you can even use those key areas in the distance for targets, guys. And I always encourage new users, focus on the advantages. Focus on understanding where the market is most likely to continue. There's a little pop right off of resistance inside of favorable large triggers. And as soon as you understand where the market is most likely to continue, when you can capitalize on these entries, what it does for you is it sets you up for the next step. It sets you up for the next part of trading, and that's the management. So I'm going to do something real quick. I'm going to give you guys what's called the KISS plan. But before we really get into this, are there any questions about the high probability trend trade? The easiest way to study the high probability trend trade, I think first and foremost, is to go back and take pictures of the rules being met. Go back and take pictures of strong triggers so that every time I see strong triggers, I know exactly what I'm looking for. And then go back and take pictures of weak triggers and talk about the idea of what those weak triggers mean to me. Anything can happen up or down. And what you're doing is you're creating recognition through repetition. What's a termination condition? Well, if price reaches Fibonacci support and all the triggers are above, no short trades. It's a term, no clear path. Thank my lucky stars, look at the bounce. You're developing trust in the methodology. You're developing trust in the patterns. You're developing trust in your chart reads, guys. And if you take these pictures and drop them in the room, well, then I'll validate or verify, yes, that is a 50-50 look. So that's the first step. So if you're uncomfortable with any of the concepts, guys, it's your responsibility to raise your hand. I'm not going to call you and ask you to send me a picture of your face so I can see whether or not you're confused. Because really, I shouldn't have to work that hard for your education. But I'm going to give you this plan that teaches you to recognize entries, guys. This is the KISS plan, the Keep It Simple Sunshine. Thank you, Bobby T plan. And this plan is a stepping stone in your learning journey. And it's designed to optimize your chances of success with the high probability trend trade or the 50-50 trade as a new user. Optimize your chances of success. What an outstanding phrase, reminding you that if you can find it within you to follow this plan, you have optimized your chances of success. And I don't know about you guys, I trade to win. I realize that I will lose, but I trade to get paid and I trade to win. So for me, it's ridiculous to take a trade without a statistical advantage. And then through simulation, study, class feedback, continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. And your simple plan for consistency says never fight the large chart. Can't stress this enough, guys. You can eliminate 60 to 70% of the mistakes new users make by never fighting the large chart. By having a stern unwillingness, if you will, to fight the direction. By saying there's no way on God's green earth I'm going to fight the momentum, and just tell yourself I'm not going to trade into those areas. And you'll be amazed at how many losers you avoid. You will create a plan based on your ability to read the indicators, guys, but you have to define your entry first. You have to become a chart reader. You have to get to the point where you can create expectations based on patterns. And I'm telling you, 30 days is not a long time. But you'll be absolutely amazed. If you take 15 pictures a day, guys, at the end of 30 days, you're 300 pictures deep into recognizing patterns and advantages. And then once you can get into the market, you've got to do something with it. Management is really the final piece of the puzzle. And your management plan is going to grow exponentially throughout the years. And management, you'll create a plan tailored to your personal goals based on your experience reading the indicators. That phrase is so catchy, we use it twice. But as a brand new user, let your plan be mechanical, the same way your entry is, right? Multicolored news in 2. Thanks, Ron. Let your management plan revolve around the idea that great entries create manageable trades. So for the brand new user, your management plan is designed around the idea that you're going to enter at Fibonacci resistance inside of favorable large triggers. And once you take this best of the best entry, you're either going to get stopped out, normal part of a positive equity curve, or the market is going to bless you with a reversal bar in the direction of the trade. More often than not, this is the option, which means that you have to be prepared to move your stop 2 ticks above it. And then once you do that, you also have to be prepared to do absolutely nothing. It's either going to hit your stop or it's going to continue down, guys, and you never know what's going to happen. You never have any idea what's going to happen. But now you've reduced your risk. And guys, the first target for the new user is $100 in the distance. The first target for the new user is $100 in the distance. And with all that momentum and the clear path, it's pretty easy to hit it. And what happens is you begin to create this confidence through the memory of success. You begin to trust your great entries. You begin to feel comfortable with your chart reads because you just got paid. And then you're going to move your stop to break even. So not only did you get paid, but you can't lose. And it makes it easier to believe that the large chart momentum, that the large chart clear path is the only reason you're in this trade. And you'll hold for your second target. And if you hit your second target, ladies and gentlemen, that is a $300 trade, which is a $72,000 year. And let me say this one more time. You will create a different management plan. Did you write all your rules on the chart, Gino? Stopped out naturally. Why were you stopped out? Because you had flat large triggers, right? Coming off of 1-to-1s. It's a mid-band, so it's not even coming from a good termination. But let's talk about it, right? Smalls are above the large. I like the look. You had an area inside of triggers. I like the look. But your large triggers never got wide, right? Your large triggers were never wide and angled in the direction of the trend. They're even flat. Can we agree with that? So the only thing that you're relying on is the momentum from the smaller indicator. Does that make sense, Gino? But Gino, let's do this. And guys, NASDAQ traders, where do you suppose your small triggers were when you got into the trade? Were they below the reversal bar marker? Here they're up, but when you got down here, were they below the reversal bar marker? Do you remember? Dollars to donuts. They were. And because they were below the reversal bar marker, you were fighting 13-2 momentum. And it just ran your ass over. Does that make sense, Gino? And guys, this is one of those things. This entire yellow section is dedicated to the NASDAQ. And there are no less than 20 entries that say don't fight the small triggers. Because what happens is you get run over. And Gino, I like the look, right? Not a bad look. Bad top, mid band, everything's up, immediate momentum. By the time you got to your entry at 92.75, those small triggers were less than a bar away. They were below the 1-to-1s. I promise you, I've traded the NASDAQ enough to know that that's the case. But the cool thing is, Gino, is I love everything about it. It's the right anticipation, and that may have been the one thing that kept you out. You were typing. So type after the trades. Focus on your trades. If you know that that's a rule, that that's going to increase your chances of success, type after the trade. Take the picture, come back to it. Take a picture at the entry. That's what you NASDAQ traders need to do. Is you need to stop taking pictures when you should be focusing on where those reversal bar markers are, if that makes sense. Two divergences. There's your pivot stop out. There's split triggers. Hopefully nobody took that one, right? Directly into a termination condition. So, Gino, the look wasn't a horrible look. The expectation was more up, without a doubt. And my only guess is that maybe those small triggers might have helped you out a little bit, wherever they were. And did anybody look at this trade that could tell us where they were? Maybe somebody else took it, lost it. Maybe somebody else was thinking about taking it, but didn't because they looked at the small triggers. But that's a pretty important part of it. But guys, the KISS plan is probably your best chance of success as you become a chart reader. The KISS plan doesn't apply to the NASDAQ. I'm going to tell you right now, the KISS plan doesn't apply to the NASDAQ. If you want to be a NASDAQ trader, you better be great at this one on a slower moving market so that you can make decisions at the drop of a hat. As you work on your KISS plan, the whole idea is finding the correct entry. So I'm also giving you a high probability trend trade checklist. These are the same rules that I would very much appreciate you writing on your chart. Let me know if it was a rules-based trade. And then I'm also going to give you the exact same checklist with pictures stolen from the resource materials, liberated if you will, about a termination that reverses the market or odds favorable, anything can happen, no clear path, all the clear path, potential for a clear path, and identifying the best of the best entry. Guys, you should study this for a few minutes before you get going in the day. And then finally, this is for my newest readers. Guys, this is your homework. And I don't typically give homework. But if you're having troubles with advantages, take 25 pictures of each of them. And Gino, I'm only using your chart because it's the one that was up. But if we go back to strong triggers, I'm going to take that picture right there. And these just aren't, they're not up yet, right? It's not even that bad, Gino. I don't think that this was a bad read. I think that it was. But if your large triggers aren't wide yet, then you're relying only on the small trigger momentum. Does that make sense? And that's not a bad thing. But the challenge is once we get to the other side of the small triggers, it becomes less effective. It really does. And we definitely got there. But so I don't think it was I think it was a good chart read, if you will. I think that your ability to understand that this pivot from nowhere into the mid band, expectations for more up, it was all there. And you probably took a shot from the absolute best spot. And my only question, just from my experience with the NASDAQ, would have been where were those small triggers? Because right now, they're not above the reversal bar marker on the first one, right? There's my bottom line, there's my reversal bar marker. And typically when it gets closer, these fall lower, not higher, if that makes sense. So I think that might have been this one little NASDAQ safeguard that could have kept you out of the trade because the read was good. I think that the entry may have been the only thing that needed a little bit of help on that one. And guys, anything can happen triggers. 3 divergences in the same place. Anything can happen triggers. 3rd divergence is higher. Every lesson that we've talked about just happened right there. If you tried to take the short, it didn't work out so well for you. But what if you had the termination that reversed it, that gave odds favorable, and we didn't reach trouble yet? What did that look like? Well, that looks like a pullback right to support, right? And because the small triggers were super fast against, maybe you're in on the correct side and out of trouble. So good stuff, guys. I'm going to take 5 minutes since nobody has any questions about high probability trend trades. I'll leave you guys watching the NASDAQ, or we can go take a look at crude oil. It doesn't matter. Look at the indecision right at the key area. How many opinions can you make before you lose all your money? Larger down, smaller up, larger down, no clear path at 83.19. I wonder how many opinions can be formed before things go bad. My record's about 784. Guys, I'm going to take 10 minutes, 5 minutes. When I come back, we're going to start to look at the charts that you guys posted. We're going to talk about them in terms of advantages. We will not talk about whether you're a good person or a bad person because your trading has nothing to do with that. We're going to talk about your chart reads and see if there's anything that I can do to help you out. So I'll be back in 5, guys. Go stretch your legs. Get away from your computer for a second. See you in a minute. right, guys, let's get back at it. And I'm going to start focusing on your charts. We're going to see what you guys posted. Going to see what we can do for you. Ron got us going this morning. And Ron says, when a termination reverses the market and gives me odds favorable momentum and I clear the trouble, I'll take odds favorable momentum and just take advantage. And guys, this is a trade that relies 100% on momentum. Notice that both trades have odds favorable momentum. Notice that he let price clear the trouble, which isn't a high probability trend trade rule, but it's very much a Ron C rule. And then with odds favorable momentum, he looks to capitalize. And guys, that is about $115 a contract times 4 contracts. And then he takes the exact same look and does it again and reaches his daily goal on 2 trades. 2 trades, momentum for the win. Guys, you don't have to take 100 trades. All right, Gino, 990 between the 2. That's a good morning. All right, pivot stop out between 2 fibs, entered at the mid band. Everything set up except small triggers on the 13.2, stopped out beneath the reversal bar of the 34.5. Everything set up except. So Gino, there's those small triggers against you again, right? But let's talk about just language real quick. Couple different things here. The first is, guys, this isn't a pivot stop out. This is very much a termination condition. So we're going to go through some language, and this will help the new users a little bit, I think. Not a pivot stop out. This is one pivot. That's it. It's one pivot with a loss of momentum. And because it's just a pivot with a loss of momentum, it can't be a pivot stop out. Nobody got stopped out. It's when price comes back to, trades below, and then back above. That's when it becomes a pivot stop out. So just a little language thing there. Gino, great recognition of a termination that creates the reversal. That's a strong bottom. That's beautiful. But when it hits the mid band, the one thing that I notice is that my synthetic triggers are about as close to a full bar away as they can be. And guys, this puts you into what we call the gap theory. When your mid-band, when fibs will undoubtedly kill the party if the large triggers don't follow. Man, have fun at the beach, Ron. If the large triggers don't follow, if price accelerates away from the large triggers fast and it hits a Fibonacci area, mid-band, anything like that, guys, more than likely it's going to snap back and close the gap to those triggers. And that's exactly what got you here, Gino. I'm going to go through it here. Is if you look at it, price hit the mid-band, large triggers were 1 tick away from being a full bar away. And what this tells me is that it's likely to close the gap. It's likely to come back and close the gap. So not just Gino, does that make sense to everybody? The gap theory says when price accelerates away from the large triggers, hits an area, mid-band, this gap behaves as a vacuum, guys. And any long trades before it comes in contact with the synthetics are likely to get run over. Can you guys hear me? So what happens is if you trade against that, you're more likely to get run over. And I want you to see you did have a mid-band inside a large, right? But there's that split trigger look. So I've got 2 correction points and the gap theory. And guys, I'm going to tell you right now, the better you get at reading your charts, the more you're going to see. And this is where it becomes so important that you follow your rules. So split triggers, once again, I don't know if you guys looked at these this morning. I went and took 10 pictures yesterday. Triggers one on top of the other, easy correction point. triggers split and divided, you don't know where the correction's going to be. One on top of the other, easy. One on top of the other, easy. Split triggers, indecision. So if I take a trade, and I love the read, I love the strong bottom, but it hit my first target, guys. It hit my mid band, and the large triggers are a full bar away. And then I couple in the idea that split triggers don't help, especially against a gap theory. And then I put in again the 13.2 small triggers are railing against me. And does everybody, NASDAQ traders, help me out here. Does everybody see how those small triggers behave as resistance? Who are my NASDAQ traders? Do you guys see that? I'm telling you, I blew out Baker's dozen accounts for you, fighting those small triggers until I finally realized that this would absolutely kill you. So a lot of things going on with this one, and just I guess the point here is that it does come from the best possible area. It comes from a termination that creates the reversal. And there is odds favorable momentum without a doubt, but then we didn't have a clear path. And then without the clear path, couple in an indecisive entry area, and then throw in, because it's NASDAQ, fighting the small triggers. And this is such a key word, except, which means that Gino, you understand the concept, but you were willing to fight it there. And that's okay, because I don't tell you guys how to trade. I just go back and read your charts and see what I can do for you. All right, Jen, there's that pivot. Right to the mid-band. Gap theory closes the gap. Gives you odds favorable the other direction. And you sold when price cleared the support. Is that right? Am I reading that correctly? So you let it get below the trouble and then carried that momentum to the next fib. Is that right? So what was your entry? One thing that may help, Jen, just to see your stuff, if you don't mind, I hate to give you a chore. If you right-click on your chart and go to Data Series, if you plot your executions, text and marker, what it does is it allows me to see exactly where you get in. It allows me to see exactly where you get out. But a lot of times this helps with patience, if you need a little patience for maybe even if you don't. But for other people that maybe get in just a little bit earlier, maybe trade into problem areas, being able to see those entries and exits helps a lot, guys. Being able to see the beginning and the end of a trade makes it easier to repeat the things that are bringing you success, without a doubt. It's a nice trade. It's 100% momentum. That's all it is. It's momentum on every chart in a market that has been screaming down all morning, and knowing exactly where it's easy to take profits. Nice job. And there's some trouble, isn't there? That area has the potential to break, but it's not broken. I like it. Momentum for the win. How many times do we say that? 50-50 was strong downside momentum. Stopped. All right. All right, I'm going to take a look at this one. 50-50. So this is what I notice. And guys, let me know if you see the same thing. Smalls eking through, not smashing through, right? They pop their head below. Not odds favorable momentum. It's slowing. I can see that because the lines are returning. That was my odds favorable. This is the small returning to the large. It's still outside, which isn't horrible. And then when we talk about 50-50s, guys, One divergence can kill the party on a 50-50. So if you look at the KISS plan, it says don't take them with divergence. I love your entry, Gino. I think it's perfect if you're going to take a shot at this area breaking. Perfect. Picture perfect. I could teach a class on entries with your amazing entry. It's okay. But the NASDAQ is wonderful. But the NASDAQ almost always tells you when the party's over. So you got a second higher divergence, 2 divergences on a 50-50, and notice that the small triggers never even blinked. That's your exit. Second higher divergence, especially on a 50-50. 2 divergences on a 50-50 sucks. That's the only way to put it. It sucks. It's a horrible, horrible plan for success. 1 divergence is usually a horrible plan for success. And the market gave you the opportunity to exit. 1, 2, 1, 2. Do you not see them? This was your first divergence. You took it anyway, which is okay. Beautiful entry. Great entries create manageable trades. There's your second divergence. That one says, get the hell out, Gino. So if you're going to trade the NASDAQ, especially right at the open, guys, you've got to be able to process your management fast. If you're taking trades, so Gino, take your trades and then annotate. So here's the deal. If Discord is up, right? Bum, 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 bum. And then you have a trade setting up, get rid of it. Get rid of it. It's like distracted driving. But this isn't where the market shouldn't go, right? The market shouldn't go above these synthetics. And it already gave you a reversal bar, which means that your risk should have been, Gino, maybe 4 or 5 ticks with your amazing entry. Maybe 4 or 5 ticks. But you turned 4 or 5 ticks into 6 points because you were hoping that the market would go down. Does that make sense? Guys, NASDAQ requires a level of chart reading to be able to understand a couple different things. You have to understand your entry rules. And let me go back to something. And Gino, I'm not knocking you this morning at all. You're giving us great ideas. But things you have to know before you ever get into a trade, guys. You have to know what your rules are for entry. So that means that if it's a high probability trend trade, you have to know momentum, a clear path in your entry area. And if it's a medium probability trend trade, you have to know what your problem is and how you'll manage. So for example, a 50-50 trade. Let me go back to the KISS plan. So a 50-50 trade has to have odds favorable on the 13-2 via the KISS plan. A 50-50 trade has to have odds favorable momentum on the small chart. Why? Because, and I love this slide chart, and if you guys don't build yourself one of these, because I don't have a clear path on the 50-50, which means that I have to have momentum and I have to have an entry area. The third thing is that if there's divergence on the 5-1, don't take the 50-50 trade. It kills the optimization of success. Does that make sense, everybody? So what counteracts divergence? Hope will make you ignore it. Wishing will make you ignore it. Wanting, needing, pleading, all those things will make you ignore divergence. But the reality is that when it's there, you no longer have the best trade. And then coming from a good top or bottom, you had that. So Gino, one of the things on the 50-50 as you grow with the software is if you are from a good top or bottom, if you are from a termination that reverses it, one divergence, I'll usually still take it because it's from a good top or bottom, because they made decisions to push the market down. And then I enter at the area. And then for the brand new user, it reminds you again, divergence, no trade. And that's a big one. That's a big one. So much so that it's mentioned twice. And guys, then your management, because it's not a high probability trend trade, the management will be different. You have to know what you're getting into to know how to manage it. And you'll notice that the window of opportunity is the same, right? The 2 ticks above or below is the same. And then Gino, if we look at your trade, brother, you were coming from a good top. You ignored the first divergence, and I can get on board with that all day long. You took the best entry ever. Holy smokes, it's beautiful. And it gave you a reversal bar, which means that your stop was right there. So up to this point, Gino, I think that you absolutely crushed this trade. And then if divergence prints exits the trade, but you entered with it, $100 on the first, $200 on the second. Well, but Pedro, this negative number flashes and says, hey, there's divergence potential, right? And you know, because of the reversal bar marker, when it's flashing, that it'll print right here. Can we agree to that? Let me show you in the live market. I know that this bar may become a reversal bar marker here. And I know that it'll be divergence and it'll be 100% true 2 ticks below it. So there's your little cheater, which means that if divergence is a reason to not take this trade, then I have to wait for it to get to where it's going to print. Or on the flip side is if I know that divergence is a reason to exit this trade, Pedro, I can literally have a stop right here. And just say, man, divergence takes me out. Or I can hover over my close button, divergence takes me out. But the thing is if you're taking a 50-50 and you're not paying attention to the way that it needs to be managed, if you're not looking for that second divergence, and again, Gino, 1 divergence from a good top, absolutely beautiful, I love it. So the second divergence prints at 90, right at your break even, totally cool. If your stop was right here still, you lost $40 a contract, maybe. But instead what happens is you hope that that thing goes down. And that's where the losses get bigger. And Gino, if you took this trade and you exit on the second divergence and you lost a couple ticks, dude, we would be high-fiving and I would be using this as the most glorious example of how to manage a 50-50 trade. So it's not your recognition. Your entry is perfect. It goes to the management, right? It goes to the management, and that's cool because it means that you're nailing entries and you know exactly where they come from. So now we've got to focus on the management. And guys, a big part of the management is understanding what kind of trade you're in. Because if you don't understand that it's a 50-50, well, then you're not going to understand that you need to manage it differently, right? So you have to know both of those things. And if you don't know how you're going to manage the trade yet, it's okay, because I'll give you the most pragmatic, emotionless way to manage both a high probability and a medium probability. You just have to go through the repetition of learning it and not hoping that everything works out. Because guys, hope is the hardest way to become a trader. Hope is the most difficult way to try to figure out how to take advantage of things. So Gino, great read on the large chart, beautiful entry on the small chart, little bit of management opportunity. And I'm telling you, the conversation that we just had is going to make it easier for you to manage. Good bottom, higher divergence, odds favorable. Let's see where you got in. You got in at 1222. So one thing Jen doesn't show you here, Jen, you're showing me that you traded directly into. Kelsey. You had a 50-50 with odds favorable from a good bottom, and then you let it break and pull back. A little deceitful with that blue arrow. Absolutely beautiful. Guys, this is a momentum style trade. The precursor was, you notice that was your third divergence in the same price range too. And then everything as strong as up. And Jen doesn't say, I'm going to try to go long into resistance. I'm going to let it get above and pull back. And I love this entry and knowing right where it goes. And Jen, this is such a beautiful trade. No, you're okay. This is me looking at arrows. This is my simple mind looking at where it's pointing and not lining up your entry over here. And it's beautiful, guys. And for you guys that are looking to take advantage of momentum, letting the small triggers break and then price pulls back and goes is good. And then, Jen, this really is just a 50-50 trend trade from a good bottom. Does everybody see that as well? Termination, full reversal, odds favorable, potential to break. One divergence, doesn't scare me because of the good bottom. Entry at support, right inside of favorable large triggers. And because it never gives another blink, you're able to take it all the way up to the area. Nice trade. Gino, this is the exact same trade that you took, brother. The only difference is she never got a second divergence. It's the same look going the other direction. It's the same momentum. It's the exact same potential to break. It's even the same entry, to be honest with you. The only difference is that darn second divergence didn't print on hers, and that's the one that changed the scenario for you. And now we just have a strong trending market, guys. And when you have a strong trending market, it means that it's been 30 or 40 bars in the same direction. It means that you've smashed through areas without a reversal bar. And you'll see this little, you'll see the dashes as the triggers run together. So all this is a strong trending market. And then it is a pullback to support inside of favorable large triggers with the strong trending market. The areas had broken. And it's just grabbing hold of that trend with the perfect entry. Nicely done again, Jen. And then Cav says, I know this strong trending market look. And the key to this one, Cav, is the odds favorable momentum. Trigger lines are rarely a bounce point. I mean, they can be. But that odds favorable momentum, I love it. They tried to push down and started heading back up, and you said, there's nothing stopping them. Let me make some money. Nicely done there, Cav. Clear path, everything up. Let's make some money. And then JW. Termination into a termination. You're at the area, no divergence. Big split on the triggers, and it works. And then, Adriana, are you in here? This is one of the things that JW does so well, and I want you guys to see this. Expectations based on patterns. Weak triggers, especially at an area or with divergence, JW knows that it's likely to push up to the midband. And guys, this is just a pattern. This is just pattern recognition. JW understands that with this look, it's likely to hit the midband. And when you have that expectation of it, guys, it makes it a little easier to capitalize on the way up to the midband. And that's all that is. The fact that it hit the midband already, JW, and that the large triggers were a full bar away, you may have pulled one off here. You might have gotten away with one a little bit because the midband's behaving as a termination condition and you've reached your target. And then you get split triggers as it comes back. And I think the idea that there wasn't divergence coming into that trade is probably what gave you that good push for the retest. Nicely done. And guys, this is it. This is all we do all day. You guys post, we talk about it. It's a little sad that there's only 4 of you posting. I know there's more people that are trying to learn how to be day traders. Oh, Cav, you still have a clear path. You're fighting immediate momentum. Price stops in the middle of nowhere, pulls back to the blue fib. Didn't quite get there. You know what, Cav? At least you're getting in on the correct side of the triggers now. So I like that. I like that you're at least being patient to get on the correct side of the smalls. But once again, your expectation is support, man. If it doesn't get there, you're fighting. You're fighting the immediate momentum. Large triggers are down. That's odds favorable momentum against the trade. That's the same look if this 13.2 were crude oil, you'd be looking to go short. And no divergence at all either. It's a risky trade because there's nothing to bounce off of. You're hoping that it just changes direction. But being on the correct side of the smalls at least gives you a fighting chance. And recognizing where the trouble is, you're managing aggressively. You thought it bounced off the fib. Didn't quite get there. So in the moment you thought this big gap, right on. That's what I'm saying, guys. You're going to take all these different trades. I'm praising the way you took it. If you're going to be aggressive, if you're going to take that aggressive shot, I love the idea that you didn't fight anything on the small chart to get back up to it. All right, who is this? This is Miss Jen. Strong triggers, but we had a termination condition. And this is, here we go with that expectation again. And guys, I think this one is repeating itself a lot today. So let's see if we can find live market too. Guys, if I get a pivot from nowhere, especially with divergence, I love that, Jen. Mid-band is my first target. And when I get to the mid-band, I've got to reassess. Because the market didn't finish the move, right? So Jen, you do go short. And I think that second divergence is a good reason to exit. That pivot stop out is a great place to go break even, and it either breaks or it doesn't. And I think this is where the management is. But the expectation, understanding that this mid-band is your goal, and then seeing that it bounced right off of it. And then when it retests and gives the second divergence, there's just no reason to lose all the way up here. Get out, make a couple bucks. And then if you really want to go short again with this, pull Cav's trick and get in on the correct side of the smalls. Does that make sense? And guys, this is where being active in the management, I know that I've reached my target, but because of the momentum, I want to try it again. I've got to be willing to jump ship. I've got to be willing to get the hell out of there if it doesn't do what it's supposed to do. And that's where experience begins to pay dividends. That's where seeing the same thing over and over really begins to pay dividends. And then we talked about this one earlier, and that is so the right expectation. When this pivot from nowhere bounces off the mid-band and continues back up, Gino, I still think that you took probably the best looking entry that you could take for continuation to go to the next fib area. And the only thing that I could even come up with to nitpick was if potentially those small triggers were hard against it at the time of the entry. And it looks like they were. It just looks like they were when it got there. And that's what kind of spoiled it a little bit. And then Jen, second lower divergence, right? Still a termination. Then this is a pivot stop out, which is a termination. Creates odds favorable. Best momentum ever, so you take the entry. And down it goes. I love it. Termination, full reversal, odds favorable. Taking a chance. on the fib, right? But with momentum everywhere in the low risk entry. Nicely done. I love it. But you have to know that you're trading into a fib. And I guess that's the only thing that I really want to point out. And you have to ask yourself, and I'm going to do this. So, guys, we're going to celebrate the winners, but we're also going to talk about lessons for the class as well. And this goes into knowing what kind of trade you're getting into. If I'm going to trade into this fib, and I'm not sure that it was 50-50 yet over here. It doesn't look like it was just yet. I know I need to manage. I'll say assertively, not aggressively. If second higher divergence or second from the fib, right? Like I'm talking to myself about, I love this entry, I love this trade, everything says giddy up, I love the termination, I feel good about it, but I am aware that this area could be problematic. So maybe I get paid right at that area and go break even, right? Or maybe I'm really being aware and watching to make sure that there isn't a second divergence coming in. And guys, I'm telling you, once you get to the point to where you can make these decisions quickly, the doors open up tenfold. Here's an easier picture of it to read, the exact same one. So this was a 50-50. And it was a 50-50 with one divergence, but there's that omission, right? Where because it's a termination that reversed the market, the 50-50, one divergence I'm willing to forego if I have a good entry. Cav says, got it, beautiful, perfect. And then he says, but a second divergence could shift things, so why don't I just go ahead and get out? And we know it went back down, but Cav, are you bummed to be out of that trade with 17, what is that, $340 for contract? Hell no. It's okay to exit and just get back in later. Cav, beautiful trade. And you and Jen showed two different ways to take it. That's what I like. But notice that your entries are the same, because great entries create manageable trades. It's the exact same entry, the exact same conditions. There's your statistical advantage. And then management's very unique. I sure will. 50% of your small triggers, or 50% of your triggers, the small, had gotten through the area. 50% had not. That's all it is. A 50-50 trade, Jen, means that your small triggers haven't broken. That's it. 67 is the fib in question, right? 67 is the fib in question. So if I look at it and I back it up, if the small triggers are through and the large triggers aren't, it's a 50-50. And okay, and you were looking at this one, huh? So one of the sad things, guys, is that this termination is awesome until you reach the next one, right? And this fib is clear until you reach the next one. So you got to be aware going through it every time. Let's see if we can find a good example. This fib broke, and then it went directly into this one. Does that make sense? That's a pretty good example. This one just absolutely smashed through. And even though it was clear up here, yeah, we hit that one. Those are the little comments that make the class better. They really are. When you guys say something that's on your mind, it gives us the opportunity to make sure that it lines up with the chart reads. All right, Pedro. First trade. Not quite anything can happen. You had more momentum than you thought, Pedro. So let's look at the picture of anything can happen triggers. Whoops. And compare it to the picture of odds favorable. Whoops, didn't want that one. Here we go. So momentum is the separation. Anything can happen is when the small triggers go all the way inside. They kind of swallow it up. And you can actually visually see the loss of momentum as it comes down, right? So as long as I'm outside, I still have momentum. It can be a little less, but it's still momentum. Then when one goes in, I begin to lose the momentum. And Pedro, I love it. You had a great look on momentum. You had smalls outside of the large. Everything is wide. The market is cranking down. I love. Oh no! First one, anything can happen. Man, I missed it. So you did. You had weakness on the first one, which means that you don't have momentum, which means that you're relying on a clear path and you're relying on an entry area. Do you remember that little slide rule, Pedro? I apologize. I got ahead of myself on this one. Since you don't have momentum, we're going to insist on the clear path in the entry area. It's the easiest way to do it, guys. If I know that I'm losing one, then I begin to insist on the other two. Sorry I got ahead of you there. I'm sure that was confusing. So anything can happen. And then has everybody heard the lecture about how triggers are a correction point? How when price retraces, we really anticipate it to come into the triggers and then we give it something solid to bounce off of. And that's really what makes these entries higher probability, because once the triggers, which are the correction point, begin to split, we begin to lose advantages. And then once your areas begin to fall beyond the correction point, then you begin to lose advantages. So Pedro, we ended up with a strong trending market, a clear path, but your entry point is beyond the triggers, which is okay, right? You're like strong trending. Let's take it at the mid band and hope for the best. And then when the second divergence prints, that's your opportunity, saying to yourself, man, if this prints, I'm done. But it's important that you recognize on this one, clear path was really the only thing that you were working with on the first trade. Does that make sense? If we go high probability trend trade advantages, the clear path was really the only one rocking there. Your areas are beyond the correction point. Yeah, but it really wasn't even a medium probability trend trade, and this is how I want you guys to think. Remember that we're always talking to ourselves in terms of advantage. So you said to yourself, I don't have momentum. And that's 33% of my advantages right there. And then you have to be willing to say, I also don't have an entry area because my areas are beyond the triggers. That's 33% of my advantages. And there's this phenomenon that happens when you speak to yourself in terms of advantages. Am I really going to take a trade missing 66% of the core advantages? And only you can answer that, guys. Only you can answer that question on whether or not you're willing to. For me personally, and this is just me, and what I do shouldn't have any bearing on what you do, but I like to share what I do. For me personally, if I'm going to give up 66% of my advantages, momentum is the one that I absolutely, positively, 100% refuse to do without. Because at least when I have momentum, I have a market that's likely to continue in the direction of the trend. And that's chart reading 101. Does that make sense, Pedro? And a lot of times, guys, you take these losers and you already feel a little upset about the losers. And then I come in and I tell you how it was avoidable. And you go through this, gosh, son of a bitch, man, what was I thinking? But you've got to take this trade and you've got to see the end result. And then what you do is you become better for it. So don't shy away from these guys. And then let me show you my favorite thing in the world. is to be able to take this loser, Pedro, and then turn right around and take a beautiful short and capitalize on it is amazing. And then when second divergence prints, manage aggressively, moving stop just above the high last. So you took 2 in, 1 out at the problem spot, and then there's another divergence, second divergence, and we're still 50-50, and we're losing momentum. And you said, I'm going to try and hold this one. And what did it do after that second divergence at the fib with weaker triggers? Did it continue up, Pedro? Yeah, I would bet. I would definitely bet that it probably did. So this is where you have to ask yourself too, and let me know what you think. Is if it is 50-50, right? And I'm getting weak triggers at a fib, and I'm getting a divergence at a fib, is it okay to just get paid and wait for the next one? I feel like it is. And that, again, that goes into management, right? So how am I going to manage this trade? If I'm coming into a termination condition and all my areas are on the wrong side of the triggers, do you see how we're going back to that simple read? I don't have a clear path, and now I don't have areas inside. I have to rely on that momentum. But now I can visually see that momentum is going away, and 2 divergences and weak triggers, I can see that momentum is going away. And this is where it's okay to get paid, guys. This is where you have to abandon hope a little bit. And I like that you guaranteed profit. But the difference between exiting at 50.4 and 52, that's $160 worth of profit. That's a lot of money. And this is one of those things, and guys, I'll never tell you how to manage your trades. There's a time when I say, I'm going to hold through the area, and it's odds favorable momentum without a doubt, right? And I'll say to myself, if price breaks through here, I'll put my stop at the area. And if that momentum carries it, great. And if it doesn't, whatever. I'm out where I was going to exit anyway. But if I have weak triggers and multiple divergences and no areas inside, what's got me hoping that that area breaks, right? Or even more so, what about my indicators is telling me that this area is likely to break? Because it's not momentum, right? It's not no triggers through it. It's not smalls inside of the large. It's not a second divergence. So there's really only one thing telling me that that area has the potential to break. And to be honest with you, it's that little devil on your shoulder saying, but what if, despite all my indicators, it goes down? But what if, despite a second divergence without a clear path, it goes down? And then the angel on your shoulder is saying, but Pedro, it's weak triggers and 2 divergences. Slope has nothing to do with it. Check this out. That is some vertical triggers, right? Holy smokes, look at the slope. Well, man, there's virtually no slope at all. So the idea is, because everybody looks at their charts differently, why not use the separation between the two as opposed to the slope? Because I can manipulate the slope any way I want to make it look stronger or weaker, but what I can't do is really manipulate the line, the space between the small and the large. Does that make sense, Pedro? And do you know how I know that? Most of you guys don't realize this. Is every little thing that I say to you guys that sounds like, oh, he's just reading that from a textbook? Pedro, I've done it. I've manipulated it to look how I need it to look to feel good about taking the trade that I wanted to take, not the trade that my rules said take. A lot of people don't realize that this class is taught from my own shortcomings. This class is taught from all the mistakes that I made, guys, learning to read this indicator. All right, let's see. Good bottom, right to a good top. Andy, this is one of my favorite chart reads. This good bottom got you right to the good top, right? And then that turned into the reversal, odds favorable. Smalls are still outside, not the best look. But you have resistance right at the top. You do have a clear path. So let's go back to the little slide chart. Andy, you didn't have the best momentum, right? It was still good, but it wasn't the best. But you did have a clear path, and you did have an entry area, which means let's take an entry and manage aggressively, because it is still medium probability. Andy, this is perfect, 100%. 100%. I'm trying to continuously revolve around advantages, ladies and gentlemen. I'm trying to continually not say, I think it should have gone down, but rather, what are the advantages? What do the indicators say? And Andy's indicators said, well, I still misread sometimes. Let's see what we have. All right, Miss Jen. And just for the record, ladies and gentlemen, I'm married. Don't show me your butt. Which trade did you skip? Did you skip this one up here? Or did you skip this one right here in determination conditions from the bad bottom? I just want to make sure that I'm reading this right. So weak triggers with divergence. JW will tell you that when I have weak triggers with divergence, my first target is almost always the midband. When I have weak triggers not from an area, the first target's almost always the midband. I think this is the 4th or 5th time we've said it this morning. But Jen, let me tell you, if you chose not to take this trade into all this trouble, there's nothing wrong with that. You got to be okay with it sometimes, right? You have to be okay with not taking the trade. So isn't that awesome, though? Did you have any indication whatsoever that this area was going to break, especially from a bad bottom? Maybe if this was a termination that reversed it, I might feel better about it. But yeah, so at this point, Jen, I hope it breaks. I hope it breaks again. I hope it breaks again. Maybe this will be the one that breaks it, right? How many shots can you take into that area? And then there's the one that says it did break. And there's the one that says with all that momentum, Jen, there's your momentum trade that you love. And then as it comes back and sets up a potential trend trade, there's those 13-2 strong triggers saying, hey, don't do it. That's not your best trade. And if you took the close on the correct side, there's your second divergence saying, get out of this trade. We're likely to go back down, especially because of the bad bottom. So Jen, all you did here is you said it's not worth my money, so it's not my money. I don't have enough advantages to risk the money. Well, you hit your goal at, what, 2 hours ago? You hit your goal going into the class. Your patience is working. You said you went to simulator. Here's the real question. Did you go back to live? You're still on sim? Great job, Jen. Great job. But here's the deal, and I think everybody will agree to this. If I say to myself, I'm not taking this trade because, right? I'm not taking this trade. Yeah, absolutely. I'm not taking this trade because of termination conditions. Ooh, why is my font black? That's a silly color. All right. I'm not taking this. Come on. I don't know how that changed to black. There we go. Not taking it because of termination conditions. Not taking it because of split triggers. Not taking it because of the bad bottom. Not taking it because of all these reasons. I can't type. That take my advantages away. And in the moment, we're so proud of ourselves, right? We're like, God, did you see us? And I did great things. And I let all these reasons keep me out. And man, look at me following my plan. And then it does this, right? And then it rockets up. And the hardest thing that you'll ever do as a trader is say, not my money. And be okay with it, right? Thinking, I think it's going to go up, but my rules aren't met, I won't take the trade. I think it's got a shot at reaching the mid-band, but my rules aren't met, I'm not taking the trade. And the hardest thing that you'll ever do is say that that's not my money, right? And then what happens is if you can't do this, if you can't say not my money, then what you're telling your brain is that this one instance where your rules not being met, where the advantages were gone that worked, is justification for breaking your rules every time in the future. And I see it all the time. People get lucky just enough to keep them breaking the rules. All right. Retest with higher divergence, push back from midband. So you got a bad bottom, weak triggers. The pain of it's reached your max point. Oh, Jen, you've got new calluses coming. I'm going to warn you right now. We all do. I still break rules every now and then. The worst is when you break a rule and then you're in the middle of the trade and you go, oh my gosh, I just broke my rule, and you exit and then it does what it did anyway. So let's do this again. Andy. Bad bottom. Bad bottom. Do you see it? Termination condition that reverses the market. Can't reach the next key area, pulls back to the mid-band, back to the 1-to-1s, finishes the move to the next key area. And then from the next key area, can't make it to the next area, pushes back to the mid-band, and then there's a little bit of a fight. Back to the mid-band again. Look how weak those triggers are. Is it safe to assume, based on patterns, that they may try to get to that next lower area? Bad bottom, mid-band, next area. Bad bottom, mid-band, next area. Hold it. Wait a minute. Bad top, mid-band. Oh, guys, look at what crude oil did. Bad bottom, mid-band, next key area. Bad top, mid-band, made it to the 50-50 on the key area. Bad top, mid-band, bad top, mid-band, made it to the next key area. Andy, I don't know if you understood how nice your read was. All you did was trade an expectation based on a pattern that repeats itself every day. So what I would encourage you to do is open up your spreadsheet, Andy, and don't just have the trade in there. Go to your chart reading things and drop that picture in there, because that's an amazing pattern that repeats itself over and over and over and over. And what it does is it sets you up in the mindset that with odds favorable momentum and everything going down and the perfect entry, you can capitalize. And Andy, let me show you something else. Trading with momentum, trading with direction, trading with a clear path, and you got paid. Trading with momentum, trading from a termination, perfect entry, not a clear path, but momentum and the potential to break. Andy, 2 trades and you're up $600. So the question that you have to ask yourself, and guys, this is a great lesson for you guys developing confidence right now, is Andy, do you need all of the trades to be successful? Do you need that momentum trade? Do you need that high volume area trade? Do you need that sketchy little 50-50 trade not from a good top or bottom? You really don't. So now you just have to figure out patience. That's it. All right, Zorro. Nice to see you posting, Zorro. I love this. Remember when I said everybody's going to see something different? Tom Petty for the win. Amen. All the momentum in the world. All the momentum in the world on every chart. Guys, I told my brother a week ago, I was like, man, John, how do I get people to stop posting momentum trades without momentum? How do I get people to stop showing me trades without momentum and calling them momentum trades? And John said, simple. If they don't show you momentum on all 3 charts, it's not a momentum trade. Odds favorable, odds favorable, odds favorable. Zorro says, let me get in before trouble, let me get out at trouble. And with all this momentum, if trouble breaks, hell, I'll do it again. Zorro, this is beautiful. Momentum for the win, guys. Momentum for the win. Hey, Gary, welcome to the room. Not strongest, but okay. I love that, Pedro. Odds favorable momentum. How can you say odds favorable and not strongest in the same breath? She is an absolute knockout for a 3. I am the smartest man ever for somebody who isn't that smart, right? So it either is or it isn't. The smalls are above, the large are wide. This is momentum. It's not the best look of momentum, but it's momentum. You have a clear path, and you take a little fluctuation in price. There are gradients of momentum. So, whoa, what did I do? So let's save odds favorable. Let's save that coveted annotation, Pedro, for this look. Because as soon as I say odds favorable momentum, I think this is the most kick-ass look ever, and I don't want to miss it, right? But if it's almost, they're trying to separate, we're getting closer, well, then it's just not the same. But that's separation. You're good there. And it clears resistance. And why are you pointing to resistance over here? Areas are defined on the large chart. Small and large got above resistance. It's behaving as support. Your arrow's pointed to the wrong chart. Pull back to support inside of favorable large triggers. What support exactly are you pulling back to, Pedro? Help me out with this one. And I'm just going to get you on annotation. What's your area? That didn't print till over here. That's your resistance that became support. Okay, so that's this one down here, right? This fib that broke. Am I reading that right? I just want to make sure. That was the resistance. Okay, cool. So your rules say put an entry 8 ticks above support. Feels a little excessive if you're trading from the area, doesn't it? Wouldn't it make more sense, Pedro, to have a limit order at the area of support inside of favorable large triggers? And I'm not saying that this isn't a trade. I'm not saying that you're not doing great things. But what I'm saying is that you say that you bought a pullback to support inside of favorable large triggers, but the reality is you bought a pullback almost a full point away from an area inside of favorable large triggers. And if you just said to yourself, I'm willing to ride it out if it goes down here, let me get my stop in the right spot, totally cool, no big deal. Your first stop goes down here around 80. But the whole idea is being repeatable, right? Is being able to do the same thing over and over. And that's the only reason. But you were already in the trade. The sun's going to set tonight at 7:49, but I can't tell people that I was watching a sunset at 11:14 a.m. It hasn't happened yet. Just because I have a video of the day tomorrow, I can't say that I was in front of it. This hadn't happened. This didn't print until 1, 2, 3, 4, 5, 6, 7 bars after your entry. Does that make sense? So Pedro, the idea, and I'm not knocking your trade, it's just a momentum trade. You jumped in at the triggers. You took a cav entry. Totally cool. But let's see where that was. What time was that? Was this yesterday at 1:54? Was that trade from yesterday? No, yesterday was Sunday. It couldn't have been. The reason I ask, and the reason I'm so pain in the butt about it is, guys, so what happened after? Did the momentum trade win? Did it carry up? Because it looks like right here it pulled back to support inside of favorable large triggers, almost the same entry, but the rules met. And I asked because I want it to be repeatable. How many times is the large triggers going to stop the market, right? How many times are the large triggers going to stop it rather than the areas? So I want it to be repeatable. I want this to be something that you can do every day. So there's the pullback to the triggers and it gets run over. And there's the pullback to the triggers and it gets run over. And there's the pullback to the triggers and it keeps going. And there's the pullback to the triggers and it keeps going. And there's the pullback to the triggers and it tries to go up and then it pulls back to the triggers and gets run over. So I'm glad that you won. I'm always thankful when you guys win money. But my goal is that it's repeatable, right? So let's rephrase it. Jumped in with momentum, exited at trouble. Because then, Pedro, you can repeat it. And let me show you how I would think about this trade. Momentum from a good bottom. Boot 'em. Love it, right? So what am I doing here? I'm saying with odds favorable momentum, if the next bar goes up, I'll take a momentum trade. And out at trouble. Or I have to wait for the area, for the trend trade area. So I'm not saying that either's right or wrong, right? The momentum trade makes a lot of sense there. But what happens if divergence prints on your momentum trade? Well, then you need to be looking for support down here. So when you understand what exactly you're doing, you know how to manage it. Does that make sense? Because if divergence prints, it's probably going down here. And if divergence never prints, you know, then you're good. And this is where letting it give you those 3 bars, does this third bar go up or down? Does it create divergence or does it move in the direction of the trade? And that's where, I'll tell you what, one of the smartest things Ron ever taught me, and I do learn from you guys all day long, is that if you're going to take this kind of trade without an area, it tends to be advantageous to let price get back up above the top of the previous bar for the long, because then it tried to get down but couldn't, right? And started back up, and then you still have room to get up to your trouble spot. So this is a momentum style trade. Does that make sense, Pedro? The read on the large chart is perfect, and that's what got you looking. And just, I love the phrase, every momentum style trade that fails typically becomes a trend trade. So you've got to be aware for that and ready for that. It's a great look. And I know I'm a pain in the ass, but I really want you guys focusing on being honest with yourself. You didn't buy support inside of favorable large triggers. Well, and this is where you got to say it's either mine or it's not. But if you're willing to take this trade, then you have to have exit conditions. And that's what people don't do on these momentum trades. As I see the momentum trade, if it happens right here, well, then a loss of momentum needs to be a reason for exit, right? If you're taking a momentum trade right here, loss of momentum becomes a great reason for an exit. And if you took the momentum trade here, that loss of momentum says, hey, let's turn it into a trend trade, right? Let's turn it into a different type of trade. And if I tried the momentum trade here off of the triggers, well, then the next opportunity becomes a trend trade. And that's kind of the only thing that I'm trying to get out of that is understand what kind of trade you're taking so that you can understand how to manage it. And it'll make it easier to not give back bigger profits. Odds favorable, odds favorable, odds favorable, clears the path. And then this is where decisions have to be made, right? Zorro? This is where decisions have to be made because it had the potential to become a trend trade. If you're going to jump in with momentum, you have to define what's a loss of momentum. Divergence never printed, right? It tried to push up, and then it tried to push down, and it did push down, and it was successful. So what if this bar wasn't able to push down? What if it kept going up? What if there was divergence? Do you hold on with your stops where the market shouldn't go? Do you exit and wait for a re-entry? And I don't have the answer for you guys. You have to have the answer for you. But understanding that it's a momentum-based trade and Zorro never lets it lose momentum, and he's able to get paid. Nicely done. All right, support is here. Price through support, small and large triggers through. Maybe not. Let me see where your entry is, Jen. 65, 65. So you're in right here, right? Not where the arrows are? You're in on the 50-50 trade? Am I reading that correctly? Okay. So you're in, no divergence, pull back to areas, right at synthetics on a 50-50 from a termination that reversed the market, odds favorable, potential to break, no divergence, easy entry, out at trouble. Beautiful. Absolutely beautiful. But the small and the large triggers aren't through, are they? The large are still right here. But the small have smashed, and there's that key word. The small triggers have absolutely obliterated the one area that's in question. And the large triggers are below this fib, but they haven't broken this one yet. It's beautiful. It's a great no divergence 50-50. Everything agrees. Yeehaw, let's go down to the area. Nice job, Jen. But to beat a dead horse, what happens, Jen, if you get in here and another divergence prints right here? Do you hold or do you exit on that 50-50? And I don't know what your plan says, and it doesn't matter what your plan says, but do you have a management plan in place if things change on the small chart? If you get a third divergence in the same location, if your small triggers continue up, right? If something says that this area may not break, do you have something in place that helps you not hold all the way up to here? It's in your plan. Perfect. And that's one of the biggest things. And I love the idea on this one. I really do. And I'm going to go back to that one that I posted earlier. As long as you know what your rules for entry are, it means that you understand what kind of trade you're taking, right? You understand the advantages, you understand the disadvantages. Hopefully you've gone through and you've mapped it out. And then if you understand what your management rules are after entry, it means that you understand whether it's an enter and hold for the duration, or if it's a divergences must take me out, or if it is 3 closes on the wrong side of XYZ, whatever. Guys, the sooner you understand these two concepts and you have a very clear path and a very concrete understanding of what it takes, I promise you trading becomes much easier. I promise you the stress falls out of it. Understanding your daily goal. Jen said that she hit her goal and shut down. She said, I reached my goal today. That's a good goal. Let me go to Sim and get smarter. That's hard to do. Even harder is stopping when you hit your stop loss and you try to trade more, because it's only one trade to get it all back, right? And guys, if it's not clearly drawn out, you're going to let all these factors come in. So make sure that you understand. And on that same token, if you're not there yet, if you're like, well, shit, Mark, I don't know, why not, just for grins, steal my plan? Because it maps everything out for you. All right, Josh, good to see you, man. So Josh says, when a termination reverses and I've got momentum and I've got the immediate momentum, but not odds favorable, I'll just jump in right at a mid band and get out at the 1-to-1s. All right. So when the termination and the small triggers rolled, did you just get slipped an awful lot? Or did it take you 2 bars to figure it out? Right on. I like it. Just great use of the 8 range. Try to get to the HVA. Yeah, it didn't get you. This is where, when this white bar prints and the small triggers are rolling, if you can get somewhere up there, you're good. It's not always easy. I like it. It's a great read. And it lets the termination condition lead the way. I've done that. And there have been times where if I've got multiple divergences over here and this white bar prints on the right side of everything, I just sell. I don't even worry about it. I put my stop above it because I know it's probably at least going to the first trouble spot. It is. It is. It didn't give you a great entry. You still were able to take advantage of it. And knowing where trouble is never hurts. And you got out at trouble and then just wait for the next one. So great execution, man. And look at that. Trouble held, didn't it? Does anyone else feel smart when their exit is on the low tick? On the low tick. If you don't think that you'll understand where the market is likely to go, guys, you're not paying attention. And look at that. There's your gap theory, right? Price reached a Fibonacci-based indicator. Large triggers all the way up above. Split triggers. Let's see if it goes up. That'll be fun. Bad bottom, straight to resistance in the mid-band, and holy smokes, it started going down. Bad bottom, straight to resistance, and you've got to rethink when you get there. Not going short, look at all the strength. If you're taking the 50-50, that's a tough one. All right, guys, I am going to leave you guys with crude oil for a minute. I'm going to take just a couple seconds. When I come back, if you have questions, it's up to you guys to lead the class. I'll be back in a minute. Did anybody just arbitrarily go short at triggers and said, but it's red? Hope not. All right, guys. So, let me go back to your picture. And man, it's easy to say it after the fact, Josh. It really is. Your ideal entry was this pullback to the 8-3 triggers. It's easy to say it after the fact, but the reality is when it pulled back to here, these 8-3 triggers were up here, and you weren't even sure that they had rolled yet, to be honest with you. They were probably threatening to roll, but they hadn't rolled yet. And man, these rolling for me is an absolute must. No, not when they roll, because then you're all the way down here at your problem area, right? By the time these roll, so the white trade's a timing thing, man. It really is. And there's some that come out really easy, and there's some that are pretty difficult. This would have been one of the more difficult ones because your fast triggers weren't below your small triggers, excuse me. It's a tough look, and at this point, I'm hoping for an HVA when it's sketchy right there. So you have to make a choice, and I'll show you what your choices are. If it really is a great top, right? And were there weak triggers at the top? That's the one thing. Yeah, so you had weak triggers at the top too. But Josh, one thing, dude. Why on earth do you want to be first? There you go, Ricky Bobby. Man, this is one of those ones when it's been railing up like that. It's hard to stop a freight train, but let's go back to your picture. Um, I won't take this one until the large roll, but that's just me. But so you get the white bar and you're thinking, yeah, let's go short for sure. And your next bar probably came to here and then back up to here. And honestly, dude, if you're going to take the first shot and you just sell, the damn white bar. And it's ridiculous because you're going to lose that one more often than you don't. And your stop goes above it and you hope for the best. And this one worked. But the reality is even though that one worked, you're putting a lot of faith in one red line from a market that has been absolutely screaming up for the last hour and a half, right? You're hoping every buyer just gave up right there because of one white bar. White bar trades give you an opportunity to take advantage of a top or bottom. But it doesn't mean, no, it doesn't mean that you just arbitrarily go, right? So what usually happens, and let's just say that this was a good bottom, the triggers roll, the white bar prints, and then you get the little pullback to the HVA, right? And that happens a lot. And that's an HVA trade off of a good bottom. Sometimes it just doesn't give it to you. And then you have to make the decision, am I just going to jump in? Which if it's a good bottom or a top, you can do it sometimes. But there's your first one, and it goes, right? And then there's a white one right off the one-to-ones, but that doesn't mean anything because it's fighting everything. And then it pulls back up to the triggers. There's your HVA line created with the triggers down. And then you get another white bar. And then here's a little pull-up, but it's into a termination. And so the white bar is only one part of it. Starting with the termination is the big part. The weaker triggers definitely help. It's just not always a home run. I still like a little patience, but you took the best first shot at it. You took your exit at the best first exit. And then you're patient again, waiting for the best of the best. For me, I don't like to see any triggers get through there. I don't even like to see it peek its head. Chris, go to indicators, right click on your 34.5 and go to indicators. And then we're going to go to T3 Fibs Pro Trader New. And under reversal bar marker 1, show reversals. And that should get you taken care of. But Josh, that's that one. If you're going to take that aggressive first shot, just sell the bar, right? Keep your risk above it. It's either going to work and you're going to look like a rock star, or that trend is going to continue up and you're going to take a pretty manageable loss. There you go, Chris. If for some reason that doesn't load it on there for you or the settings are already right, sometimes reloading the template helps. You can just right click and reload that template. So what creates a good top or bottom? It's the reversal. What's your definition of a good top? Because there was no reversal, every trigger was up. Yeah, try reloading the template, Chris. Right click, go to templates, load, and just put that 34.5 back on there and see if that helps. 8-3 triggers above small, both are moving in parallel direction, must have a white bar with HVA line. Well, you broke all of your rules. Didn't you? So let's see. Didn't have a good top. You only had a termination condition. 8-3 triggers above small. That doesn't make sense to me. It's just a termination. That's all it is. It's not a good top until it reverses the market. At your entry, everything was greening up. You just reached a no more longs point. That's all it was. So when you say must have 8-3 triggers above small, what does that mean? You want your 8-3 triggers up here, or did you want them below the small? Probably below, right? No, that's okay. Both are moving in parallel direction. What does that mean? That both are down? And this is where it's just as important that your language makes sense to you. Were they really both down at the time of entry there? Let's be honest with ourselves, knowing what we know about trigger lines and how long they take to roll. Were they both down, or was one down and one up? Okay. And then must have a white bar with an HVA line next to it. So this HVA line prints when this one does. But the HVA line, what you're doing on these white bar trades, Josh, and I think that we may have just found a little language that helps, is on the white bar trades, you're not waiting for the HVA line. Because this bar forms it, what you're doing is you're anticipating a pullback to the HVA line on the bar, because this is where that pink line is going to form. And when that lines up with the small triggers down, that's your perfect entry. And that's why I was saying that the timing is so huge there. And let me... Hold on. I just want to see. So here's the NASDAQ, and that's not a good bottom. Let's see if we can find a good bottom right there, or at least a termination, 1052. So that was your termination condition at 1052. And I'm going to pull this over. And you see all the dance? White bar, these are still down, right? We're still not fighting strong triggers. And then we get weak triggers at a pivot stop out. That's this over here. Now we're starting to get the trigger roll. Now the smalls roll. Now you get the white bar above it. And notice that these triggers have rolled. Now we're on the correct side of everything. It's an easier look like this. And now I'm back inside of the outer bands. But even this right here, you don't have a lot of opportunity. There's not really a pullback back to the area. And by the time it does pull back to the area, well, it's directly into a termination condition. So it's not just the white bars. It is the accumulation of the white bars, of the roll, of the termination, of all those different things. And I think you're on track, without a doubt. You're on track. That was the easiest one ever. And sometimes it just takes a minute to tie it all together. But one of the biggest mistakes that I see on the white bar trades is fighting the 34-5 triggers, or the large short, let's just say the large short triggers, because you're not necessarily on NASDAQ, is when your large chart is still odds favorable momentum into the area. But the white bar trade isn't a good top or bottom. It's a termination. It's a termination. And let me see what that termination looked like at 1041. The white bar trade isn't a good top or bottom. The white bar trade is a termination. Because if you wait for the roll, you've missed it. So a no triggers through termination creates a pretty big advantage. And then letting your range chart slow down enough to get those triggers to roll. So you had the right idea. And maybe that just goes back to language a little bit. It's not a good top, right? It's just a termination. And then you're seeing that roll, you're seeing that change happen on the smaller, faster chart. And that's what's kind of setting you up for that next look, for that potential entry off of the termination condition. Does that make sense? So I think you could adjust good top or bottom. We've reached the mid-band, and the large triggers are more than a full bar away. Absolutely, Jen. Absolutely. This is where there is the potential for it to pull back. This is a 50-50 trade to the downside. Notice that you had 4 divergences up here. That may have been overrun. And now it's getting better and better. Now we're getting below. Still 50-50. So we're saying to ourselves, if there's divergence, maybe not. But is it going to come from up here at 66 and change? Or is it going to come here from 57? See the split triggers, Jen? And now when I get to my area, my small triggers are above my reversal bar marker. That's a tough look. That takes away an advantage. So let's see what it does. Here's a little one for the NASDAQ users. Josh, it was a great read on the large chart. And it gave you everything that you needed. And your entry was a little more jump in, but because you knew with that level, it was solid. Like, I'm not knocking you. Guys, if I talk about your trade and you win and I point out challenges, it's just to make sure that you understand what you're getting into. I know, but I still worry every now and then. And then NASDAQ traders, give me a Y if you see how those trigger lines acted as support because they were less than a full bar away. This is what I want you guys to get. Does everybody see that? Gino? That was a good example. So let's see what happens. Which correction point? Absolutely, Bob. And my reversal bar is still inside. Now it's below, right? If I'm anticipating more down, well, this is where I could right click and I could go sell stop, right? And put it on the reversal bar on the correct side. But I'm hoping that some one-to-ones stop the market, but I'm not going to fight these triggers. Whoa, 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 cancel, cancel, cancel. I'm not taking that trade on my Apex account. Holy smokes, I'm glad I saw that. Let's see if they act as support again. There's a close below. Should we sell it? See if we can get to the first trouble spot. So what happens if I get a higher divergence? Because I already traded one divergence, not from a good top, at a mid-band. So now I have to ask myself, if I get a second higher divergence, do I want to be in this trade? I'm going to know that divergence is true right there at 61. So I take a minimal loss. I break my rules. I have split triggers. Guys, the close on the correct side doesn't guarantee. This is a bad top. This is a 50-50. If you were hell-bent on taking it, you got in here. This said, get the hell out. Does that make sense, everybody? I broke my rule for a good top or bottom. I broke my rule for divergence. The only rule that I followed was the second divergence. And of course, there it goes, right? But now, it's odds favorable. Guys, it's okay to take that exit. And that's the challenge, is if you don't know what kind of trade you're getting into, how on earth can you manage it, right? How can you say to yourself, if this happens, then I need to do this? And that's really the key for this room, guys, is getting you to that point where you can say, so Jen, there's the gap theory again. And it doesn't guarantee that it's going to straight line. It doesn't guarantee that it's going to go back at all. But if I can look at my chart and say, hey, because price reached these yellow 1-to-1s, because my large triggers are a full bar away, I'm going to choose not to trust this mid-band inside of triggers, especially when my synthetics are all the way up here. So it's just chart reading. I don't know how gold behaves enough to have an idea on that, but there's the NASDAQ again, right? It still hasn't really cleared it. And now I still have split triggers, and now my small triggers are up. How many times can you get bumped in and out and still end up positive? And I see that a lot. I see people taking riskier trades you do have odds favorable. It is a 50-50. The divergences are resetting, but my only area inside of favorable large triggers is up here. Does that make sense? The problem is we think that we have to get this because what if we miss it? What if it goes without us? And now it's doing everything we anticipated it to do. But because it's a bad top, it still might be trying to get up there. So I'm not jumping in arbitrarily, especially against these small triggers. And let's see what it does. Small triggers say be patient. Small triggers say hold the phone. Calmate. But I'll tell you right now, my large triggers are up, my small triggers are up. If you're using a range chart, that is absolutely screaming against you from a bad top, mid-band, and what's been a very up day. And sure enough, it blows right through it. You guys want to know the truth? This is where I start thinking, hell, I want to look for opportunities to get to the next key level. We'll just see if something shows up. Does that make sense? Did you guys see the whole progression of that? How it's easy to get enticed on the small chart, but the large chart read said don't do it. Just be calm, be patient, wait a second. Your money is worth the absolute best of the best. You just have to define what the best of the best is. Did anyone go short and lose? Did anyone go short, make a couple bucks and manage out? Gino, you went short and lost? Do you understand why? That's the biggest thing. As long as you understand the challenges, guys. And then eventually when you get good at recognizing challenges, you get good at making the choice on whether or not you are willing to take trades into them. Does everyone recognize how this resistance is a termination condition, how the large triggers are down, how the small triggers are up? So now I have a termination condition. Small's below the large. Small triggers are screaming to the downside, but these small triggers are up. Which way is it going, guys? Are we going up from here or down from here? Is anybody sure? Anybody? Well, it did, didn't it, Pedro? But that's only one piece of it. Even after divert. So, bad top. 50-50 with divergence. How many times have we seen this one? Bad top, 50-50 with divergence. Does anyone have a recipe for success where that's what you're looking for? I don't. And then Pedro, you can do cool stuff like saying, well, it's a 50-50 from a bad top with divergence, and my window of opportunity extends from this midband all the way up to this fib. And you have to ask yourself, is this acceptable risk for such a crappy look? My answer is no. And then when I get to the area, the small triggers are screaming against it. and then I get a second divergence, and then it closes the gap, but everything has changed, and I just have to be patient. I can't go long into it. And the challenge is that it's not always our money, guys. So you're absolutely right, Pedro. Before the divergence, it was awesome. But if you got in here, did you get run over? And if you tried it again, did you get run over a second time? Because your small chart never gave you a clear entry. Your small chart gave you a horrible look for a 50-50 from a bad top. But when it gets back up and retests resistance and everything is below, now you start thinking to yourself, well, shoot, this market may be coming down from resistance. Those 4 divergences in the same price range with weak triggers were helping me identify overrun, and this just confirmed it. And now the top is in, but we're directly into support. And none of the triggers are broken. Does that make sense? So Pedro, and just everybody really, because this was a great lesson, it's not just one thing that gives you a trade. For the brand new user, where's my slide rule? It's 3 things, right? And the second I start to give up one of those things, I'm no longer high probability. And I have to decide, do I have enough in my favor to risk money on a medium probability? But if I didn't have the clear path and then divergence takes away the momentum and my entry area is just crappy, no offense, Gene, why did you go short? Other than you hoped it would go down. It's pretty cool because you guys will get to this level. And this is how I'm going to end today. Because it used to annoy the ever-loving crap out of me. My brother would